Welcome to the Boardroom Report, your weekly pulse on the seismic shifts in business, technology, and policy that demand your attention. Let's dive in. First up, the AI inference wars have officially begun. On Christmas Eve, Nvidia finalized a massive $20 billion cash deal to acquire Groq's chip assets and intellectual property. This is Nvidia's largest ever acquisition, and the strategy is clear. We're in an era shifting away from training models to actually running them, what we call inference. Groq's LPU technology was clocking speeds 10 times faster than Nvidia's in specific tasks. Instead of competing with that latency, Nvidia simply bought it. They are bringing over founder Jonathan Ross and 100 engineers to integrate that speed directly into the Nvidia stack. For the market, this is a major vote of confidence. Nvidia stock jumped 5% on the news. But for the boardroom, this signals aggressive defense. Nvidia already controls 80% of the market. By snapping up the most promising specialists in ultra-low latency chips, they're effectively raising the barrier to entry for rivals like AMD and Intel. The only headwind remains the DOJ antitrust probe, which makes the specific structure of this deal an asset purchase rather than a full corporate buyout, a very calculated maneuver to dodge regulatory bullets while securing the tech. Silver has been on an absolute tear and recently touched the record $78 an ounce, doubling its performance for the year. This rally was driven by mining strikes in Venezuela and Nigeria, alongside rising industrial demand from the AI and solar sectors. However, the market has since seen a 10% correction back to the low 70s, a move analysts are attributing to short-term profit-taking. A key development occurs on January 1st when China is implementing new export licensing rules. As China processes roughly 70% of the world's refined silver, this regulatory shift has raised concerns regarding global supply. Elon Musk has warned that such disruptions could impact the EV and solar industries. Finally, regarding speculations of a US silver ban, no evidence supports these claims. The primary supply-side factors remain the implementation of China's new export framework. OpenAI is currently seeking $100 billion in new funding at an $830 billion valuation, a significant increase from its previous $86 billion funding mark. This valuation is anchored by plans to launch a proprietary advertising platform and a strategic partnership with the Department of Energy focused on energy-efficient AI infrastructure. Concurrently, the company is implementing a safety overhaul that includes rigorous internal audits and updated protocols to address cyber risks and social engineering threats. This pivot signals a move toward more mature governance while positioning OpenAI as a direct competitor to Google in the advertising space, creating new dynamics for major players like Meta and the broader AI market. The FBI has significantly escalated its investigation into public fraud in Minnesota, with estimates now suggesting over $9 billion in theft across 14 state programs. This probe, which intensified in late December, builds upon the Feeding Our Future COVID-AIDS scandal that has already led to over 70 convictions. Federal agents recently raided autism centers, focusing on a network of shell companies alleged to have exploited Medicaid and service provider systems. Critics of the Walz administration have pointed to lax oversight, noting that a substantial portion of the state's $18 billion in Medicaid budget may have been compromised. As the investigation widens, the fallout is expected to drive stricter regulatory enforcement and impact investor confidence in state-level assets in Minnesota. California Representative Ro Khanna has thrown his support behind a California ballot initiative proposing a one-time 5% tax on fortunes exceeding $1 billion in the state. Targeted for 2026, the measure aims to raise approximately $100 billion to support state healthcare services amid federal funding cuts. The tax would impact roughly 200 billionaires, prompting figures such as Peter Thiel, Larry Page, Bill Ackman, and others to threaten relocation. Khanna addressed these threats by stating, "I will miss them." While supported by labor groups like the SEIU, the initiative faces criticism that it could trigger a talent and capital flight to states like Texas and Nevada, potentially undermining Silicon Valley's economy. The Federal Reserve has effectively ended quantitative tightening, quietly resuming Treasury purchases at the rate of $40 billion per month as of December 12th. This move, often dubbed QE Light, targets short-term bills to ease pressure in the repo markets and inject liquidity into the financial system. Additionally, the first quarter of 2026 is expected to bring a further 100 billion to 150 billion liquidity boost via tax refunds. While this capital injection has supported the recent Santa rally in the S&P 500 and AI sectors, contrarians warn that this return to easy money could reignite inflation risks and create choppy market conditions heading deeper into 2026. On December 30th at 2 p.m. Eastern, the Federal Reserve will release the minutes from its December 9th to 10th meeting. Investors will be scrutinizing this document for details on the internal division regarding the recent 25 basis point rate cut. Key areas of focus include Chairman Powell's specific tone on future easing, the committee's assessment on tariff-related inflation risks, and their outlook on labor market stability ahead of December 31st jobless claims reports. The market implications are binary. Hawkish hints could spark immediate volatility, while a dovish tone would likely reinforce the liquidity narrative currently supporting tech and risk assets. That's a wrap for this week's Boardroom Report. If you liked it, please leave a like, comment, and subscribe. See you on the next one.